Hey traders, Mike Sir here. Welcome back to my channel. For traders who have been trading for a while, we have all experienced the highs and lows in trading. Now, there are times where we lose a lot of money and we feel depressed, we feel sad, and sometimes we feel like giving up on trading. Well, I've been there, and one thing that I always do when I'm down on myself is read the book Trading in the Zone by the late Mark Douglas. Now, his book is considered by many in the trading community to be the Bible for trading psychology. And this book has helped me overcome a lot of my struggles early on in my trading career and is still a book that I reference from time to time. So in this video, I'm going to share the top 5 things that I learned from reading his book, and I'll give you my personal take on each one. Now, I highly recommend that you buy the book and read it in its entirety. I've listed a link below where you can buy it directly from Amazon. So let's get started. Many traders strive to make enough money from trading to be able to replace their income from their everyday jobs and hopefully transition to trading full-time. Now, with a job, there's a certain guarantee of what you will make each and every month. However, with trading, there's no guarantee that you will make enough to replace your income or even cover your monthly bills. Heck, you might even lose money in a certain month or lose all of your money. So how can a trader produce a consistent income from trading that has an uncertain outcome every single day, week, month, or year? Well, you can, and what you want to do is follow the model of how casinos operate. Now, as we know, casinos make consistent profits day after day, year after year. But how can the casinos consistently make money on an activity that is also based on a random and uncertain outcome? Well, you can always say that it's the problem of the gamblers because they're too emotional or they don't know how to gamble. But what the Vegas casinos, experienced gamblers, and the best traders in the world know is that even uncertain outcomes can produce consistent results if you can always have the probability or odds in your favor. And most importantly, there is a large enough sample size. So let me give you an example. Let's just say that you have traded a specific strategy that has made you money 70% of the time. Now, that's a pretty high probability, right? So what usually happens is you see an opportunity in the market where you utilize this strategy, but this time you lose money. You feel upset because it was the perfect setup and it was making you money before. But now you start to doubt the strategy and eventually you give up on that strategy because you believe that it doesn't work anymore. Well, the top traders in the world don't think like this. They think in terms of probabilities and treat trading like a numbers game. Now, once they have a proven strategy or what we call a trader's edge, they stick with it. They know that on a trade-by-trade basis, the outcomes of each trade could be different and random to one another. However, on a big picture level, the outcome over a series of many trades is relatively certain and will produce consistent profits for them. Another thing that you should accept is that whenever you enter in any trade, you should not have any expectations of what the outcome of the trade will be. It could be a profit, it could be a loss. You can't control the market nor predict the future of an uncertain outcome. But understand that the odds are in your favor and that you will make money overall. Nobody in the world likes to lose money, right? Whether it's a bad investment you put money into and the value of it declines, or in the case of trading, buying a stock and seeing the stock price fall. So if we all don't like losing money, then why would we want to get into a profession where losing money is all but guaranteed? Now, do you think that you'll make money on every single trade? Of course not. And this is where the emotional discomfort of losing money or the fear of losing money comes in. As traders, we need to accept that we are engaging in an activity or a profession where there's a risk of losing money. And this means that you must learn to think about trading in a way that the possibility of being wrong, losing money, or even all of your money doesn't cause your mental defense mechanisms to kick in. Now, this isn't easy for many people, so think about it this way. It doesn't do you any good when you're putting on a trade, but you're fearful of the consequences, which is potentially losing money because your fears will act on your perception of the markets and on your behavior in a way that will cause you to create the very experience that you fear, which is losing money. Let me give you an example. Can you remember a time where you were so afraid of something bad happening to you that you created this altered vision in your mind of how painful and emotional it was for you if this bad thing happened to you? You were probably nervous, you're scared, but in the end, nothing bad happened to you. Now it's the same in trading. You put on a fearful trade and the trade goes up in your favor. You immediately sell it for a quick small profit because in your altered reality, you fear that the trade will lose you money. But what ends up happening is the price keeps going up and you miss out on a very good profit. Or the other scenario is the trade goes against you and immediately confirms the emotional pain of losing money for you, and this results in you further deepening your fear of placing another trade. So how do you trade if you trade scared? Well, the top traders in the world accept that there is risk. They know that they will lose money and they won't perceive anything that the market can do as threatening. And if nothing is threatening, there's nothing really to fear. Now, I'll give you a quick tip. In the beginning, let's just say only risk whatever you feel comfortable losing. Now, there's no set percentage risk per trade theory. Everybody is different. If I tell you, let's just say that you will lose $100 on this trade, would you be fearful? How about $10? Would you be fearful? Trading gives you a lot of freedom to express your thoughts on things like what do you think about a specific company, where the stock price will go, or whether there's going to be a stock market crash. Heck, I made a video several months ago laying out my thesis that the US stock market is going to fall. Well, boy, was I ever wrong. So the two questions I want to ask you is, what do traders do if they don't want to accept responsibility for the outcomes of their interpretations? How can traders participate in an activity that allows them the freedom of choice, but at the same time avoid taking responsibility if the outcome is not what they expected or to their liking? So, for example, let me poke fun at myself. Now, I put together a thesis that the US stock market could potentially fall sharply this year. Well, it hasn't. Now, I could continue to post more videos where I would say that the market's heavily manipulated, or the strong stock market is fake, or have the belief that any day now the market is going to crash, like someday I'm going to be right. Well, I'm not going to. I've accepted responsibility that I was wrong. I stopped shorting the market, and then I cautiously changed my mentality about the markets. Now, the fact is that if you want to create consistency, you have to start from the premise that no matter what the outcome of any trade is, you are completely responsible. You can't blame the markets, you can't blame someone, or try to justify whatever reason that will make you feel better. What you need to do is reflect on what you did wrong and how you can improve on the next trade. Have you ever felt on a certain day that everything was going well for you? You wake up in the morning, it's nice and sunny outside, you turn on your computer to trade, you do some market research, and you find a good trading opportunity. You press the buy button and the stock goes up and you make money on it. You turn off your computer and then spend the rest of the day just relaxing with family and friends. Well, irregardless of whether you make money or not, you can have that reality every day. Now, here's how you should approach the markets. When you completely accept the random outcomes of the markets, you'll accept the fact that there is risk in trading. Well, once you accept that you could lose money, you eliminate the potential to define and interpret the markets to move in a certain direction. Once you stop having certain thoughts or interpretations about the markets, there's nothing for your mind to avoid or protect against, meaning that you don't have any preconceived thoughts. Well, when there's nothing for your mind to protect against, you will have an open mind to what the market may offer you on that day. And since your mind is open to whatever possibilities, you will naturally start discovering other opportunities that you couldn't perceive before because you are so fixated on a certain thought. Well, when you're at peace with not knowing what's going to happen in the markets, you can interact with the market from a perspective where you let the market tell you what is likely to happen next. And at that point, you will be in the best state of mind, and this is where you've entered the trader zone. The goal of any trader is to become consistently profitable. And in order to achieve that, you need to develop the belief that you are a consistent trader. Now, Mark has broken down this belief into 7 parts that you can work on individually to achieve the belief that you can be a consistent trader. If you enjoyed this video, smash that like button and comment below if you read the book. Please share with me what you thought were the biggest takeaways from the book. Also, if you want me to share more of my thoughts of the book and about trading psychology in general, please let me know in the comments below. I'll see you guys in the next video.